All right, guys. Hey, it's Sam here, back with you mid-morning, September 9th. We're going to take a look at Ethereum, Litecoin, and Ripple, assuming I've got time here to do this. Now, I've got the 60-minute of Ethereum on Kraken. And, you know, as you look at this chart, look, I recognize there are a lot of lines on this chart, and this is hard to see. It's hard to figure out if you're, if you're not drawing these lines yourself. So I guess to some degree, this is what a working chart should look like, particularly with the kind of swing retracement and extension that we're seeing here, and the nice subdivision in Elliott count. So, your chart should start to look quite similar to this. And of course, it's helpful if you've drawn the fib swings, because you know where things start. But when in doubt, you can always reference them by where the edges are. So as we look here, currently we have the dominant swing from this low here. So we low to high, went to the 50. Here's the negative 23 of that pull. Right, we've got a very big, very strong cluster up here. So that's our pull. Then we pull from that 50 to this high. Right, here's the edge here. We go to the 50 of that one. Then we come back down. We hit the 382. Okay, so just to show you. So if I take that off, and I'm going to take that off. All right, so now I'll take a few more off just to clarify the chart. So now we've just got our dominant. So why do I keep the dominant up? Because we haven't hit those targets yet. The negative 23s are still there. So we've got that. There's our 50. We haven't hit that target yet. We get this nice subdivision. So this is getting a little trickier here, because we get a C wave here. We get a shorter C. We're looking for the C wave for this A, B, C. It would have been really nice if that C wave came down to a new low off of the A wave. Doesn't do it. We get a double bottom here. So we got to stay with a potential C wave here, because this works. So here's our A. Here's our B. C wave, as you'd expect, subdivides into a 5-wave sequence. That's the C. Now currently our 2-wave. Let me put this on so you can just kind of make some sense of what I'm showing you as potential roadmap. So as we break it down, so now it's just a matter of breaking these waves down. So if, again, here's a potential roadmap, right? Technically valid. I'm going to squeeze these up a little bit. Technically valid. So what would, if this is our 2, what are we expecting? Well, now we're expecting a 3rd wave, and we're looking for an impulsive subdivision. So boom, starts with the 5-wave sequence into a 1. What are we waiting for? We're trying to trade 2s and 4s. And B's into C's. So there's the 1. We're waiting for the 2. Well, there it is. In fact, I just put this up on TradingView, and I've drawn this little box here, and there's no mystery as to why. If you follow me, this should be, you should have this same box, or potentially already be in the market. So all I'm doing, and I'll just recreate it here. So I'm making the assumption that this impulsive move here is the 1st wave of my impulsive structure that I'm expecting within this 3rd wave. If this count, again, only potential, but if this roadmap plays, what do I expect to see? I expect to see a 5-wave sequence to complete this 3rd wave. I'm looking for impulsive behavior. So where's the most likely target for a 2nd wave? Between the 50 and the 618. So let's draw it up, right? Your chart should look very similar. Again, it's not rocket science. Okay, we're just pulling a fib there. How hard is that? So we draw the box between the 50 and the 6. Well, you draw it between the 50 and the 618, but I would suggest to you put your stop on the other side of the 65, because we've seen that time and time again. That's often a little stop run on the stops that are too close to the 618. So you draw a little box there. Right? You should, if you didn't catch it, you could stop right now, go look at Ethereum. If it hadn't gone too far, you can get in that trade right there. In fact, better, because I'm in at the 50 with a stop on the 65, and it goes to the 618 to the tick. And now we get a little bounce. So it's a better trade right now. So if we look risk reward sitting here right now, and we got upside targets here, well, we got a lot of resistance we got to get through. If you're on the other side of the 65, you got almost an 11-to-1 trade. You want to give it a little more room down to the 786, because a 2-wave can go that deep. Wouldn't be unusual to see it go that deep. There's 4-to-1 on the first cluster. You want to keep it tight and say, okay, I'll keep it a few ticks under the 618. There's 8.6 to 1. If I get stopped out, that's okay. I'll look for a re-entry because my loss here is so small, it doesn't hurt me. I wait, and maybe we go down to a smaller time frame, and I wait for a little 1-2 to develop. A little. What am I waiting for? I'm waiting for a higher low. Right now, that's, man, is that looking good right there? So, if you let's blow this up so you can. I mean, that's pretty nice, right? Right to that. It's you got an overlap here with this 50 and this 618 goes right between them. So there's your trade. So what kind of dollars are we talking about here? Well, we're at 301 down to the 65, which is 296. Right, so this is a small amount of money, right? So this is one where you can be fairly aggressive, particularly if you're entering here now off of the 618. You can be fairly aggressive there. Again, it's always a balance between how diversified are you across the market? What's your account size? What kind of risk tolerance do you have? What's your trading plan? Those kind of decisions you make as an individual. So I'm not saying load up here, but I'm saying you can be more aggressive there because your downside. If you're buying here at 298 and your stop's at 296, that's the kind of trade we're looking for. Very low risk with excellent upside. So that's a trade you can take right now. Now, do we stall here? We don't know, right? So we're looking. We certainly have evidence of a three-wave sequence. We got the A, there's the B, some kind of C. And if we can break this down a little bit, looking for some sort of a relationship. Here's A from the B. Well, we get through the 100, 1272. We get a nice little cluster here. So I'm going to pull this down here. This is our current little cluster. So there's the 618. So if you wanted to be a little bit, give it a little more room, you go underneath the 618. That's common target for the A wave relationship to the C wave, right? So 1618. So you got this nice little cluster. That's a nice looking trade right there. Doesn't mean it's going to turn there. Doesn't mean. It's just an opportunity to position yourself in the market with low risk, with a nice upside target, with good structure, with a pattern that's proven to be reliable over many, many millions of waves. Right, so and that's all we're doing. That's all we're trying to identify. Can we enter the market with an upside of minimum 3 to 1 with very low risk, so that if it just keeps rolling here and we get stopped out, it's we're not emotionally impacted. It's sure nobody likes to get stopped out, but if you're stopped out, it's not going to hurt you. So this is you want to play it a little bit more conservatively. Nothing wrong with that. Nothing says you can't do this. Wait for this. There's the first little push. Then we come down. Then you're higher low, and then we look for this. Right? Because you could take that down to, if I'm on a 1 hour, you could take that down to the 15-minute. A lot of people will tell you, buying new lows creates new lows, right? Because you got tight stop, this thing keeps rolling, and those stops are getting hit, and that adds more push to the downside. So if you want to be a little more conservative and you like this trade and you hate getting stopped out, well, you wait for the first higher low. Then you can take that trade with your stop below the pivot on the assumption that this is your good pivot, which makes sense considering where we are, a tick of the 618. Probably the single most common target for a wave 2. So if Ethereum is going to play ball, then you'd start to look at it this way and say, oh, yeah, trading view is annoying about that. So we put this little channel on it. Okay. So if we break below this and we keep heading down here, it can stay. We're trading this internal retracement of the one wave, looking for that. We've got plenty of energy down here from the oscillator. Wave trend is, pressing, into deeply oversold. Now it can stay down there. So you could wait. You could wait for the cross here for entry if you want to be. For me, I'm already in. If anything, I'm looking to add. So, for me, this would be, if this pivot is valid, then the next place to add is if we get a little punch up here, then I'm looking for that next higher low to add, because now. If this roadmap is correct, we're in the 3 of 3, right? Here's the 1. Here's the 2. We're looking to get into 3 of 3, and there'll be opportunities along the way to add, because if that's the case, so we're going to have retracements within that. This starts to move, first retracement. Starts to move again, next retracement. Same idea. It's the same thing, just over and over and over again, which is kind of my point in showing you this. It's consistency. It's not about any one trade being a winner or a loser. It's about doing the same thing, using the same approach, the same methodology over and over and over again. Eventually, the odds work for you, not against you, like going to Vegas. Right? The people will often say the difference between trading or speculating and gambling. Gambling, you sit down at the table knowing, fully conscious of the fact that the odds are working against you, and the longer you play, the more those odds work against you. If you're a speculator, you're looking for opportunities where the odds work for you. And the more you trade, unlike gambling, and put yourself in those high probability positions with low downside, those odds start working for you. That's the difference between trading, speculating, and gambling. Let's go over to Litecoin. Now, here's one that is kind of a surprise. So because of the big push in Bitcoin, you might have expected Ethereum to get impulsive here and go with it, but we don't. What do we get? We get a 3-wave corrective structure. So all the ingredients were there. We had the A, we had the B, we had the C wave come down into a nice 5-wave subdivision. We wicked the median line. It's all looking good. We get action, but once we broke this swing high, now we can quantify it as a corrective wave. So what is it? Well, that's not so much what matters. We go here. Well, we got a little push for it. It made the attempt. It even went through the 6.5. So there's a little, it's a little FU from the market, wicking those stops before it rips down, right? And so what's the tell? When you see that push through and those stops are ticked, and then it immediately rips down, that's a very bearish signal. So where's our next target? So, simple, right? So we're going to go down here. There's the negative 23 lining up pretty nicely with the median line. So, you look at it here. So we've got the modified shift on it. So we've gone outside of it. So 2 things you could do. So we put the 1.5 and the 2 on it. And we see, well, that's containing it rather nicely. Or if that just, clutters the chart too much for you, and you want to just stay with traditional, well, then you'd go here, and then I would just take a trend line, and I would just draw it along that so you get the angle right, and then move it up here, and here's your outside channel. Right, so any sort of push up here, you'd be looking for a reaction there. So there's your outside trend line, which is very close to the 200%, right? So if we double this distance, well, that's what So there's our next target. Since this is corrective, so we've got to relabel this. So maybe it's A, B, C. There's a D. We're coming down for the E. We've gone into some sort of complex correction. But what can we see clearly to help us identify the trend? Well, this was a clear impulsive wave. So is that the X wave? And we're going down. Now we're going to try and connect an A, B, C. Maybe we go double A, B, C, X, A, B, C again. Possible. This is disappointing for Litecoin bulls that this didn't turn impulsive. So we got to go down again. So we do as you'd expect. We take the swing low here, our last major swing low to swing high, and where's our expectation? Well, we've got this little pocket down here, but you have potential support. You have potential support right here. I mean, you're already through you're wicking the 50 here, so maybe. So you might hit a little support here at this previous swing high, wave 1 of this prior impulse, possible. So you've got some contenders here. So that's where maybe the oscillators can be helpful here if we get into the oversold zone here where we get that energy to rip higher. That's possible. That's possible. So one to watch. Right now, no trade, no trade. You got to wait, and still, then we want to get better structure here so we can look at this to get more confidence. Because right now, it's just, it becomes a guess. Is it an ABC? Is it an XYZ? Is it a, again, when in doubt, pull fibs. If the 618s and the 50s are not holding, maybe this is not the market to be in until we get more clarity on what this is. What can we say with absolute certainty? That we're in some sort of a correction. We're still way, way, way internal of this entire swing high to low. We've yet to get to the 50. So complexity here. That when in doubt, stay out. Let's go over to Ripple. Now this has been quite a run here. So just again, look how perfect this meeting, whenever you get three swings, put a pitchfork on it, because you'll be absolutely astonished how consistently that will contain the market and give you structural clues as to where you're likely to see algos respond. Now, add the fibs to that, and you get a nice potential roadmap. So here, I'm just pulling from what we have labeled as a truncated fifth. We get the 1, 2. This is the 3. Now we're in some sort of extended fifth, and with the potential that we relabel this, that this becomes a 1, 2, 3. So we certainly have that potential, because this is now the dominant move. So even if we go to the waves, you can see how much stronger this is. So it's it's tough to carve out a 5 wave here to call this a 1. It's tough to see that, but we could have a 1, 2, 3, 4. It can be there, right? So sometimes it's less important to identify the 1 than it is to identify the 3. So clearly, this is either some sort of an extension in the 5th, or we're going to relabel this as the 3rd wave. We're going to put in a 4, and we're going to keep going to new highs. But right now, so if you're not in this, and how would you trade it? Well, as simple as it can be, we just go from this swing low to this swing high, and now we're looking for the next reaction at the median lines. So likely target here. So we've already gone from the outside edge of this median line. We've gone the outside edge to the median line. Right? So we've already bounced off of that, which would imply if we're going to keep going, we've got another test of the outside channel. What are we waiting for? We're waiting for it to do the push all the way to this edge. And that could be a wait, because now you got to draw a couple of them. So here's your wave 4. If we're going to keep going, we're just going to pull a fib, and look how that lines up. So there's the 3.8 and the 50 right there at that edge. If you're in it, great. I know some of you are in it. If you're in it, good for you. Right? We're here on a 4-hour. So if you're not in it, you're waiting. What are we waiting for? We're waiting for a 3-wave correction, just like Bitcoin. We're waiting for some structure. I think I've got it here on an hourly. So now, here's the difference. So here's the pull from this swing low, right, to what we have labeled as our major pivots. And then over here, I've got it. What did I do differently? Here's my swing low. Here's my swing low. I've added the 200%. So here's a potential target. This was when I was looking at this, thinking the potential was that this becomes our 3rd wave. So we're going from our absolute low to the AB here. So see the difference? So here I'm going from this to what I have labeled as 3, 4. On the other one, I'm pulling from this low and using these pivots. If you can see that difference here. So look, this is the 200% is containing it, and I think the point I was trying to make is, where's a likely target up here? Right there, to push to the median line. Now we're hot on the oscillators, as you can see. We're hot on the oscillators, and we've got this big move here. So what are we looking for? We're looking for the retracement. So if this is going to keep rolling, well, likely target. Here's my swing low. Last high, we were looking for this potentially down here, very shallow. There's a contender. That's the negative 618 at the median line. We'd also, let me pull this off just to declutter a little bit. If we're going to end up calling this a 1, 2, and this is our 3, well, we're going to pull from this low here, our last low, to that high, looking for entry over here. Likely to find support at these swing highs. So that's a contender. we'd want to pull also from the absolute low here, or pardon me, from what we have labeled as the 4 low, because we had a little complex triangle there. So you get some overlap. So we got some contenders down here if we're going to come down that far. Nothing says we are. So if we go, let's go to the 1 hour. And this is still rolling. Now let's look here within this. So we've got big wave here, third wave here. You know, we may well be relabeling this. So what can we see now? So now we've got get the ABC. So now we've got some sort of corrective action. What do we want? We want that. So we got to wait. Same thing. We sit patient. If you're not in it, that's not bad news. We've got a market that's moving impulsively, which we're looking for 2s and 4s. So regardless of what this ends up being, is that our 1, is this our 3, 4, 5, we're just looking for the next correction, and we're pulling fibs. And looking for that structure, which has contained this so nicely, this structure here, to give us the opportunity. So we can use more than just the retracement. We can use the structure. We can use the combination of the pattern, the price, i.e. the fibs, and the structure here as the median lines have contained this move beautifully. Right? And then we've got potentially, you know, if you want to go full featured on it, you'd pull this over, because this was prior resistance. We're now to and through. So on the pullback, so you got a lot of things saying here, next opportunity is right here. So this likely becomes our next support area, or potentially it's a support area. Lining up with the 3.8, lining up with the 50, lining up with the median lines. You know, to fine tune it with the oscillator, maybe we get a little retrace down here. We're waiting for that 3-wave subdivision to give us the structure that we're looking for in terms of the corrective behavior. Okay, that lines it up. All right, I have my 21 minutes. Okay, I'm going to wrap it there. If I've got something else to show you today, I'll be back to you later.